Hello and greetings to all dear member of the Behdan channel. I hope you are doing well and are happy and healthy wherever you are. Today I am here with a lesson on candlestick patterns. In previous session I talked about static and dynamic support and resistance. I mentioned that we buy and sell at static support and resistance zones and along dynamic support and resistance lines. However, to make this trade more optimal, it is necessary to learn candlestick pattern. There are various candlestick patterns in the market, but I will teach you the most important. The first candlestick pattern is the single candle pattern, also known as the hammer pattern. Hammer pattern. Uh, Characteristics of the hammer pattern. This pattern consists of a single candle. It has a small body with a long lower shadow, at least twice the size of the body. If the lower shadow is equal to or smaller than the body, the pattern is invalid. The upper shadow should be small or ideally non-existent. This candlestick should form at price bottoms or at static and dynamic supports level, as we expect the price to rise after its formation. However, this is not 100% certainly, because the market uh, operates on probabilities. These patterns simply serve as confirmation to help us make better trading decisions. The color of the candle's body doesn't matter. It can be bullish or bearish, red or green, black or white. However, for this pattern, it is preferable to be green or bullish, as it increases its reliability. Summary of the hammer pattern, it forms at the end of downtrend. After its formation, we expect a price increases. Now let's talk about the opposite pattern of the hammer, the inverted hammer shooting star pattern. This pattern is the exact opposite of the hammer. It has a long upper shadow, at least twice the size of the body. The lower shadow should be a small or ideally non-existent. This pattern appears at statics and dynamics resistance zones and signal a potential price decline. However, just like before, this is not 100% certainly, as the market is based on probabilities. Summary of the shooting star pattern, it forms at the end of an uptrend. After its formation, we expect a price decrease. Let's look at some example. Static resistance example. Uh, you can see that after the price reaches static, you can see that after the price reaches static resistance zones, a shooting star candlestick forms, leading to a price decline. Dynamic resistance example. The chart shows that after hitting a dynamic resistance zone, a shooting star candlestick forms, causing the price to drop. A static support example. Here we have a static support zone, and after touching it, hammer candlestick forms, leading the price increases. Dynamic support example. In this case, the price reaches a dynamic support level, and a hammer candlestick appears, pushing the price upward. This concludes the first lesson on candlestick pattern. In the upcoming sessions, I will teach you more candlestick pattern. Make sure to follow and subscribe and share this with your friends. May God be with you and protect you.